And there's gold. Gold underperforming here today. Perhaps a little bit of fear coming into this meeting minutes. By the way, we just hit breaking news. So we do have, of course, the meeting minutes are out now. Of course, this is not your usual news where it's like a big number and then the market spikes. This is going to take some time. This is the meeting minutes being dropped, and markets volatility wise may look to increase here in the next hour. If you guys do have the meeting minutes pulled up, please feel free to share them. And if anybody could get a link to me, that would be awesome. I know I always have a hard time finding that. Chris, where do you usually go to get the meeting minutes?
I will go to financialjuice.com and just get some of the real-time headlines, and then there'll be links to the meeting minutes. There'll be all the different outlets that are showing headlines, and just easy to kind of look at a glance and recap some of the big points.
Yep. Very nice. Yeah. Okay, cool. Yeah. Usually I'm just looking at headline news as well, just to get an idea of what was said. Of course, that the meeting minutes are being dropped here.
I'm seeing right now, Nick, it says almost all participants judged it appropriate or acceptable to leave target rate unchanged. So potentially, I don't know if that's signaling a pause for July. So one thing to watch, I'm sure you check this out too, but the CME watch tool. The Fed watch tool that right now is around 86% probability of a rate hike for July 26th. If all of a sudden this language is coming out that there's appropriate rate unchanged and it's data dependent month to month, those favoring an increase noted very tight labor market, stronger than anticipated economic momentum, little evidence of inflation being on a path to return to 2% target over time. Well, that sounds completely conflicting to what I just read.
So yeah, no, and I'm pretty convinced they make these things purposefully confusing, just totally to throw everybody off.
Yeah, mild recession is likely to start later this year, same as in the May minutes. So that's another thing that might grab the market by the throat a little bit, is the reality that if you notice this too, if you've been watching the 2 and 10 year Treasury yields, you notice that we're back to the deepest inverted yield curve that we've had for a long time. We're back to that 1% low like we had back in March. So again, like the short-term treasuries just continue to climb, creating that bigger differential. And again, I think if something breaks, then the Fed's going to be reactive, whether that's, cutting rates, raising rates. Something's going to be like, we're going to form tops and bottoms by something breaking. It usually has been happening the last, 15 years. Something breaks,
Yep. And so that's the question is, the constant weighing of how much can the Fed go without hurting the economy? Right now, numbers have been pretty economically resilient, but that does give, like we just pointed out, there is some room there for perhaps more rate hikes, and it does seem like they're kind of committed to their concept, probably kind of as expected, which is why we're not seeing any groundbreaking knee-jerk reactions out of the market right now. Dollar's still kind of on its course here between the two support and resistance zones that we drew just moments ago.
Did you know that you can watch Trader Nick live stream every morning, Monday through Friday, with guests from all around the world? Each morning, right here on the A1 Trading YouTube channel, we put on a live show where Trader Nick, along with some very special guests, go over their charts and ideas for every kind of asset. We do a live reaction to news drops and do analysis immediately following. You never know what's going to happen during one of our streams. So come be a part of the live stream community. You can find our live streaming schedule on the A1 Trading Twitter account each week, so you never miss a news event.
Gold here. Let's see if gold is making any substantial move. Gold has been down here today, but with the release of the meeting minutes, we haven't seen any dramatic moves just yet. Just coming off the lows here just a bit is the gold market. We'll take a quick look at the NASDAQ. NASDAQ here has been a really strong day for the NASDAQ, pulled back here, and now on this hourly candle that we are currently at, a little bit of movement in both directions, but no immediate knee-jerk reactions here that I'm seeing, Chris.
Agree. I was just looking also, you'd mentioned, gold and silver, the comparison today. What is your bigger picture outlook on silver? Silver is one of my larger positions in my portfolio as far as playing precious metals and hedging and stuff. And I like silver, revisiting $29.50 to $30. I would be a huge fan if we get a breakout above 30 and all of a sudden we're talking $40, $45 silver. But I think a lot of that type of movement plays out with a longer term, weaker dollar. Bitcoin's another big story this year with a break above 32. If we get it, I think the herd jumps right back into Bitcoin. We're talking 48K, we're talking 68K. There could be enough behind that move momentum wise to maybe, in the next 6 to 12 months, see a 100K Bitcoin spot.
Yeah. So to answer your question, I am currently long both gold and silver.
Okay.
in various ways. I've sold puts on silver, as you saw there a moment ago. I mean, tiny positions for me, Chris. I mean, I'm dabbling with options, you have to understand. But gold, I do have a bigger position. Not going too hot for me. It's a lower time frame trade that I picked up this morning. Tried to catch it off of these, here, sort of more intraday 4-hour candles. Tried to catch it off of support here. Not immediate reacting the way I would have liked, but still overall gold bullish. I mean, I have to be careful with it because, again, the gold market is paying attention to, of course, the Federal Reserve, but also the other central banks, where they're headed. And I did kind of like that the RBA signaled a pause, at least for the current time. That was what happened overnight. Of course, we were sleeping at the time, most likely, but with that included, they've also kind of stayed on the stance of more rate hikes are not out of the question. So watching the global central banks tends to be a really important thing for me when I'm talking gold, not just the Federal Reserve, but we've seen sort of this hawkish stance. So those things kind of working against my position. But, I like that we had, from a technical perspective, we had this kind of daily downtrend, but on the longer term basis, I'm talking weekly charts, I still think we're in a nice upward trend in the metals market. I think we have room to go higher. And any fears around, inflation concerns, I think that you pointed out silver, I would say, would probably perform better in a super highly fearful inflation environment, especially if the Fed begins kind of, not necessarily rate hiking tremendously. Like you said, the dollar play there is really important for both silver and gold. Again, I like gold. I think we had a nice little breakout here to the upside recently, retested the trend line, broke out. And so as long as we keep putting in higher lows, I'll be looking to be long gold at this time. You mentioned silver. So silver, I also, like I said, I have put sold on this one, and those are in profit at this point. I sold them back a little while ago. So, we could pull that back up just for the silver position. So I've got one that's in profit, sold the August 4th, $20 strike price, and July 21st, $21.50 strike price on SLV. So a little bit different than spot price, but very, very close. What about you? What do you think on the metals market? Do you have any? You mentioned silver's a bigger position for you. What's your longer term outlook, shorter term? What do you
so let's talk gold for a second. Also on the daily time frame, there was a nice bounce end of June. So when we ended the quarter, we had a nice bounce off the 200 EMA on gold. So if we're going to hold those levels, at one level that I would note is 1895. As long as we hold above 1895, I think gold still remains bullish. We break below that, we possibly bring back in like the 1840, 1830 level, come back kind of the midpoint of the larger range the last 2 years. If we look at silver right now to me is in a bullish channel to the upside with a bigger range from, you take that giant COVID swing from March of 2020 all the way up to August of 2020. That to me is my big impulsive wave, and I'm looking to see how this whole correction plays out. I'm bullish on silver back up towards 29. I've got a symmetry measurement up towards 35. So I've been doing the same thing. I've owned SLV. I've been trading a lot of options against it to lower my cost basis, whether it's credit spreads or covered calls against my ownership position. So I'm going to hang on to silver until we hit 29 and change. And by that point, my break even is going to be $15, $16. So there's some good profit potential there for me. If I can hang on to it with a breakout above 29, then I think, symmetry goes to 35. We look at a higher time frame, silver goes all the way back to $44 and $45, which would obviously be enough. I think something has to be kind of breaking for silver to break out like that. But at the very least, from the COVID swing low to COVID swing high, I'm accumulating silver like crazy off the lows at $15, $14, and I'll trade it up to, essentially 100% gains.
Fair enough. Yeah, no, I think silver is a very interesting play, both in the short term and the longer term, moving very uniquely to gold here today. Like I said, kind of outperforming pretty strongly. And so definitely some interesting, we're not seeing any, like I said, guys, when we talk about this news event, the meeting minutes news, it's not the same thing as like an NFP release or a Fed rate hike decision, because again, this is just a report that gets shared publicly at this point, and everyone kind of goes through it, and the markets may be moving for the following couple hours, but it's not sort of a knee-jerk reaction like sort of a headline CPI number would be. So regardless, we are seeing some volatility. We're seeing in terms of commentary that Chris pulled up, it seems like the market saw exactly what it was kind of forecasting, which was, again, a defensive Federal Reserve, meeting minutes, which is, again, what people were kind of expecting. They were expecting that commentary to continue to be on the hawkish side. Hey, we might need to keep going with the rate hikes. Inflation's not where we want it. The same stuff over and over that we've had for several months. This is not necessarily incredibly spike-worthy stuff, as there's nothing quite new to be hitting the floor at this time. Chris, are you seeing anything else on the headlines that's catching your eye at all, or not really?
I just posted in the private section. If you want to actually go through the meeting minutes, there's a link to it. I'm looking at currency strength right now, Nick. I don't really see a lot of activity at all. I mean, we've had now, two little updates to the currency strength. Dollar is still the strongest of the day, but flat, essentially, like very little movement, very little reaction for the meeting minutes. The currencies that were weak this morning have stayed weak. The currencies that were strong have stayed strong. Vertical axis wise, I got little to no volatility today. So I think it's just, we're also coming off a holiday week, right? So, Monday was a partial day with equities markets closing at 1. Forex market stays open, but low volume, low volatility. Yesterday was a holiday for the US. So it might just be a little bit of, go enjoy your summer. Go outside and do something. But yeah, I think that, look, don't let low volatility lull you to sleep and get complacent, because believe me, whether it's July, August slow down, expect September, October to start cranking again. So I think traders need to be ready. I think this is going to be a big move come second half of the year. And again, I don't really know, nor do I care what direction we see, but let's plan accordingly. So, I mean, to me, as far as if we go back and talk about dollar index, I still think dollar index in the near term remains strong, just because the Fed isn't changing their tone. They're pretty hawkish. If the market's going to price in that 25 basis points hike, or the market's going to price in a pause or more restrictive Fed, then the dollar gains strength. But I think as we get into potential recession, and if we see the recession causing the Fed to backpedal and start to cut rates into 2024, that opens up the doors for a weaker dollar. And I think that weaker dollar plays out a lot longer than just a couple of months. I think we could see a 6 to 12 month trend against the dollar.
So the dollar is flying, but I'm not in the dollar. I'm looking at S&P long trades, and I had actually entered one a little while ago. So what I was looking at is basically Powell hasn't really said anything different. The consensus of another rate hike, or maybe 2, to get us to 5.6, 5.75 by year end is still pretty clear. So I don't think he'll say, he hasn't really said anything different. Inflation is obviously still the Fed's concern, but PMI is lower. On Monday, we saw lower numbers. So spending is declining. CPI is coming down. Overall, inflation core is still somewhat stubborn. Overall, inflation is coming down, but there are still concerns of that. So thus the idea of another rate hike or 2. But yeah, so what I'm seeing and what we've been talking about for a while now is kind of like the tail end of all of this, and when interest rates will kind of stop, being hiked, and they'll eventually go to their pause. And then at some point in 2024, where they're talking about cutting again. So looks like the overall sentiment is just kind of the hawkish Fed is somewhat declining, in my opinion.
Yep. No, and I think we are seeing a little bit of dollar strength here. So would you kind of take this dollar strength as an opportunity to perhaps pick something up on the long side? For example, maybe gold or S&P 500. The dips on these things, of course, being caused by dollar strength here today. If you want to, you've got your chart pulled up. If you want to share that, we could take a look at what you're looking at today.
So I do like gold. I'm still not in it yet because I tested it at the bottoms there, trailed out for some profit. But, price is coming down pretty hard today. So yeah, I'm going to look for something, maybe another long entry, but today's candle is pretty bearish. So we'll have to see some confirmation for me to want to get back into this trade. But I do like gold to the long side. The same way I like S&P, except the stock market has one more thing that I like, and that's from Smart Money. There's a very clear bias around this. You can tell that the S&P has had huge number of longs added, and while number of shorts is declining overall. So sentiment overall is getting better. And as we can see, as prices moved up, this incredibly bearish sentiment around this hawkish Fed idea is starting to fade. So less bearish, more bullish stock market overall. And just looking at that drastic change means they're betting on a higher move. So I like the S&P.
Oh, and Frank, tell us about that. Those two columns, those change in longs, change in shorts. What is that referring to? Because I think some of the newer traders might be a bit confused by that. And why is that a bullish signal to you?
So when you see a change in long or change in any kind of contracts, it shows you what the Fed's doing, or not the Fed, what Smart Money is doing week to week. And what they're doing, what it looks like, is betting on the Fed to sort of remain the course and, pick up shares in the meantime. So a change in long means they're adding shares, they're adding contracts on a week to week basis. And we've seen this for the past handful of weeks right now. Meanwhile, what you see here is a negative number, negative 21,000 to the short side, which means they're not increasing any short positions, they're actually getting out of them. So increasing the number of longs, they're increasingly bullish, and at the same time increasingly less bearish. So we're seeing, in short, just a larger bullish move. Whereas if we were to look up just one row at NASDAQ, it's not a very clear sentiment change because there's both an increase in longs and shorts. Still net positive because we've got 9,000 compared to 7,000. But what's a very clear bias right here is on the S&P. So Smart Money is buying up the S&P right now.
Okay, fair enough. Yeah, no, thank you, Frank, for that. Again, I like to bring Frank in for these COT report data tracking moments because, again, it gives us an idea. It gives us some closer look as to what institutional money tends to be doing at this current time.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.